The Dow traded lower today, down 100 points. However, note what the trend has been doing in the Dow. There's a simple trading rule that as long as the index or a trading entity does not close below the T line, the 8 exponential moving average, the probabilities remain extremely high that the trend is still in progress. That was number one clue that we hadn't had a reversal. Secondly, notice the nature of the signal. It closed up closer to the top end of the trading range, not showing any real strength as far as the selling was concerned. That same scenario can be applied to the analysis of the NASDAQ. Once again, uptrend. Notice how the T line is kind of pushing everything up through the 200. It's been indecisive up here, but note how the T line still acted as a support level, and the nature of today's trading was indecisive, kind of a doji type day. This illustrates that there isn't any great selling occurring so far in the markets. It also implies you have to be a little bit weary, but as of yet, no major change has occurred. And at the same time, the transportation index, indecisive but was trading positive today. Also, given the illustration that there wasn't any comprehensive selling across the board, that they were still buying transportation stocks, which means the overall market did not change. The strength of a chart can be illustrated basically by the signal, as we can see in the earnings report for Delphi, DLPH. It did a kicker type signal to the upside. It also created a J-hook pattern, indicating there's probably going to be more upside continuing this uptrend. Once again, the signal itself illustrates strength, and it confirms that a pattern is in progress. The same analysis can be applied to our recommendation on BE today. Note how we had kind of a bobble pattern. A bobble pattern is where they come up, hit a resistance level, pull back, but notice what they couldn't do. They couldn't close below the T line. The next time they come up through the resistance level, it's telling us that the resistance level now is not acting as resistance, that we basically have a J-hook pattern in progress. A bobble pattern is a just much more defined J-hook. Basically, if you took the 50-day moving average out, you can still see that you had a J-hook pattern. It just gives you a much more clear indication that that pattern is forming. This also allows us to project that a bobble breakout is usually going to produce more upside. So if you look at the whole chart in general, you basically have a double bottom that started with your best friend signal, a doji followed by a gap up, starting the uptrend. And the strong selling in Domino's Pizza would not have been a surprise, because look what happened last week. After a shooting star, a bearish engulfing signal, a bearish left-right combo closing below the T-line, this all indicated that the sellers were taking control, that if you had started shorting in here, you took advantage of that price move. Essentially, the sell signals tell when the bears are starting to take control. A close below the T-line is confirmation that the strength of the sellers is now putting you with probabilities that a downtrend is going to be in progress. This is just analysis of simple logic that is built into candlestick signals and patterns that allow you to be in the right place at the right time with a high degree of accuracy. That'll be it. We'll see you in the chat rooms.